Everyone shows you their winning trades, and I'm sure by now you know the realities of social media influencers and traders and the smoke and mirrors that trick you into signing up towards whatever they're selling. But as you know, I'm all about showing you the proof and realities of what it looks like to be a real trader who trades for a living. Whether it's going through my broker sync journal where you can see my exact executions, or most importantly, for more than a year and a half now, I've been documenting my trades live ahead of time. Public signals that I give for free where you can audit it yourself. The exact time of the screenshot, the exact time of the trade, that's the only thing you cannot fake. And in that showcase of transparency, you've seen my losing periods where I've had 7 losses in a row, or you've seen my high moments where I've had 2 or 3 winning trades back to back, leading to an 18% gain in a single day. And in today's video, I want to further that spirit by showing you the realities of a loss I took today. A loss that I gave as a public signal, nothing cherry picked. This is literally from today's price action. My hope is that you learn from not only my winning trades, but also my losing trades. Because even though I took a loss today, I was still happy to do so because it was a valid loss, an unavoidable loss, and a loss I would take time and time again because I know I have data behind it and I know that the odds are in my favor to continue to take these kind of trades. As a trader who wants to get funded, this may be the most important video for you because you need to understand when to change a system versus when to accept a valid loss and keep pushing right before you strike gold. So first of all, let's start off with a higher time frame. We can see on the 4-hour time frame that we are approaching this supply level that not only broke structure over here, but actually had multiple levels of bearish structure. After that, price started to break these structures by having bullish breakouts and higher highs and higher lows and so forth, with the most recent higher low making this higher high, breaking the previous high and grabbing all of the liquidity of these equal lows. So what do we take from this to simplify this? As you know, from the higher time frame, I only take a few pieces of information. Number 1 is overall trend. Number 2 is my immediate trend. Number 3 is my point of interest. And number 4 is liquidity. And in this case, the only relevant liquidity was the one that was grabbed over here. This liquidity grabbed to make this higher low to then fuel this move to the higher high into supply. So therefore, we have a few roadmaps. Number 1 can be, as we approach the supply level, we can start to have a complex pullback down to this demand. Once price arrives to this demand, maybe it continues higher to then continue on with this higher low, higher high, higher low in demand, continuing to make a higher high. Another option could be price continues lower, makes a lower high, lower low, and continuing on bearish to follow this red line bear structure. Whatever the case may be, I don't care too much because I'm not trading the 4-hour. I'm not swing trading. So for price to go from here to here, let's say, that might take a few days, if not even a few weeks. So the longer term plays is not my trading style, not my objective. I'm looking for high probability, high win rates, high confluence, and high risk reward intra-session movement, time, lower time frame confirmation, and inducement. So therefore, when we unpack the lower time frames and get to the intraday level, we'll start to see what we're really looking for to build this all together. A lot of you may think, how am I able to perform not only with my own large capital? How am I able to do this in front of hundreds and thousands of traders that view my public signals? Is because I rely on my risk management OS that is powered by data, powered by AI. Software doesn't have emotion, so I can directly export my emotionality. All of these decisions that lead people to have FOMO, revenge trading, all these mindsets of a trader is very natural to have. But when I'm utilizing a tool that is designed to help me, then it makes the whole process a lot easier so I can focus on my technicals and my entries. And therefore, I'm giving it away to you for free for the rest of your life. Just make sure you go and use the link in the description to download it today. And I'm sure it will help you in your trading no matter what level you are. Okay, now let's jump down to a lower time frame. Usually from the 4-hour time frame, I very quickly jump down to the M15. I don't waste too much time on the higher time frames because I'm not a higher time frame trader and it doesn't bring me too much information, contrary to popular belief. Now that I'm on the M15, I need to look at the intraday movement and intraday price action. So as we know, we were bullish until we arrived to this supply zone. And from there, first of all, I need to read structure and liquidity. So we arrived to this supply zone. We had this very nice inducement high, and that was simply a run of liquidity deeper into supply. Clearly no other purpose apart from grabbing stop losses. Inducements are real. They happen all day, every day. This inducement allowed price to come lower. Now, when price did come lower, we had these equal lows at Asia low. Smart money traders are thinking perfect. We've had a buildup of equal lows, and therefore when we approach New York window, I've got this smart money sweep liquidity zone, order block. They're going to call that a demand area. I call it a smart money trap. So therefore, all of the traders that were trading the sweep, waiting for the New York window, waiting for a bullish break of structure, and then loading up buys over here, they were unfortunately taken out. They were taken out because of another inducement high. From here, we can see certainly the sellers are in control. We arrive to a supply zone, we induce, and then we have a bearish movement. We create a trap trap, we have another inducement, and then we continue to have bearish movements. So for the start of this week, Tuesday has shown sellers intent, sellers control, sellers movement. As we move lower, we can start to see we are taking out not only previous Asia lows, previous day's lows, but we're having breaks of structure. So we can start to see the sellers are clearly in control. And then when we approach the next day, what do we have? Complicated price action for some, but very clear to read that we have a trap to grab liquidity around the Asia midline, an Asia midline sweep, a continuation model to allow price to come higher. And then when we have a sweep of Asia high, we have that inducement. That's when we start to have bearish reaction, another buildup of liquidity here, another inducement right here, and then continuing bearish movements. And if you remember from one of my previous videos that got more than 100,000 views of an exact strategy that I gave, realize this: we had a support level. That support level turned into a resistance level after the break of structure. We had an inducement, break test inducement, and then continuation. So we know that's another strong sign that the sellers are clearly in control. So even though we don't have a full break of structure over here and actually creates a lower low, that's something that I would love and I would definitely prefer. But in this case, it did not. But this is also an important moment because a lot of traders are going to see, oh, price didn't break structure, means buyers are in control. And they're going to see this as a demand area. They're going to see all this bullish price action and they're going to think, oh yes, buyers are in control because no break of structure. And because of this internal bullish price action, they're going to think, okay, buyers are in control, and they'll look for buys. That is the mistake, because if you read market structure and supply and demand alone, then you don't have the full picture. You need to connect this with liquidity and control. And just like I've walked you through this price action, where do we see the buyers are in control? We can clearly see inducement, inducement, inducement. We are seeing nothing but signs that the sellers are in control. And if I show you the M1, you'll be even more blown away at how obvious and clear the signs are. But we can see in the key moments, the key time windows, the New York window, who's in control, who's moving price action. This happens time and time again, and we can read it from control and intent. Now I'm going to quickly jump down to the M5 time frame because I think I've demonstrated the point just to show you further how these things work. So as we approach our day of trading, we can see that we had this buildup of trendline liquidity. That trendline liquidity, even though it's in our direction, we are looking for sells. We can obviously appreciate the traps that go into this. So this area right here, this Asia low of previous day, is this a demand area? No, it is a lower low, because in a bearish market, when you have lower low and then price starts to continue higher, that doesn't make it a demand. We have a supply zone over here. Price targets the supply and continues lower and takes out this previous lower low zone. So we shouldn't necessarily put weight on a lower low area, but we can put weight on inducements. And when I see that price does this inducement sweep low and grabs that liquidity into this weak demand, this lower low demand area, then I know that the buyers are starting to gain control, because until then it was sellers control, sellers control, sellers control. Now we've had a first sign of buyers control to grab this liquidity. And where would their first target be? It's going to be the previous inducement level of control, that previous area where the sellers first found control. So price is just doing its thing. It's inducing low into a weak demand to grab this liquidity and then to also come to this supply zone of previous inducements. Once price has done that, then we need to resettle and see who is in control, because right now we have buyers control and we have sellers control because of this inducement supply. So now we have that tug of war and we're neutral. So what happens next? No market structure, no supply and demand. What happens next is inducements tell us who's in control. So let's read that a little bit further. Can you spot it? I think it's loud and clear that we have a buildup of liquidity down here, leading to a Frankfurt open inducement down here. And if you pay even more attention, you'll see where is it hitting? It's hitting this previous liquidity pool that had a previous inducement over here that led to a higher high into the supply. And then you can also see that this had a buildup of liquidity here, and it also had an inducement over here. So now when I see this price action, I can see multiple things. I can see that the buyers took control, they pushed higher. We grabbed liquidity of this trend line. Sellers came in, they did not gain control because we grabbed liquidity off the lows and continued higher. That's showing the buyer's intent. Then we arrive to this inducement supply zone. We have a build-up, we have an inducement. So sellers temporarily take control to come back to this inducement demand. Then we build up liquidity, we induce once again, and we push higher. But before we push higher, we need to take out these smart money traps. This smart money zone, which is going to invite in traders who see supply zone that led to a bearish lower low, that then had equal highs and run of liquidity, and then they wait for the London open to sell. And what happens over here? They get a few doji candles, they get a few double tops on M1, and then eventually they get taken out. Why? Because they don't understand daily cycles, they don't understand traps and manipulation. And to be honest, it really blows my mind, those traders that don't read the lower time frame, that don't read inducements, that don't trade like this. Because honestly, if you don't, you're trading blind. Like, how else do you see the market? Once you see it, you can't unsee it. And this is the language of price. I'm reading this candle by candle like a book, just to show you who's in control. It's not even about taking these trades, and I don't take all of these trades, but just the language of price. I think that's a minimum for any trader. First, learn how to read price and then figure out how to trade on that information. But these people that just use Fibonacci's, EMAs and trend lines and all these things, they don't realize that they are liquidity. Their losses are because they don't understand the real movements of price action. And if this is a lot for you, if this is quite overwhelming and you don't know where to begin, go through this channel. I've made almost 100 videos breaking things down in extreme detail so that you can start to learn the realities of the market, which is why we've had so many traders who have got funded, who have made significant payouts just by watching this channel alone. It might be a lot if it's your first time watching me, but if you go through the videos in this channel, slowly things will stick and come together. And if you want to have a faster learning curve, if you want to get all of the information in one place, join us in our live streams. We trade live every single day, 2 times a day for the London and New York window, where you'll also have access to our inner circle, where you'll have one-on-one mentorship, coaches assigned to you, homeworks, PDFs, ebooks, guides, extra videos, and over 200 hours of recorded content from me, just going through Q&As and doubts of people just like you. There's nothing more you would need. So if you are really serious about your trading, come join our live streams by using the link in the description. Okay, continuing on, as we now take out the supply level, we've taken a lot of liquidity. Now I'm starting to think, okay, where is the next trap? Where is the next inducement? Because here we are just flowing higher and this inducement is fueling it. But then I start to see the next smart money trap. Equal highs, run of liquidity leads to a push lower, the efficiency of the pullback, and all these inducements are showing me sellers are not in control because we're trapping out all of the seller zones. So when I see just intention that buyers are in control, buyers are in control, buyers are in control, and selling zones fail and selling zones fail, then I know that the buyers are in control and I need an inducement high if I want to sell. So this area right here is clearly a trap because buyers are clearly in control. So what happens? We arrive to the zone, we tap in. When that first tap in invites in sellers, they see that internal break of structure, they sell over here, they get taken out. Then they see a push down again, a small break of structure, they sell again, they get taken out by that wick. And then eventually the consolidation is where I get my interest, because now I'm starting to see distribution. I'm starting to see a liquidity pool forming below as a target, and I'm also seeing prices induce this smart money trap high. So now I've seen an inducement of control and price consolidating and creating these lows. So this is where I started to get interested in selling, especially as I approached my New York window. Now, another thing to notice, a small thing, is that we had this inducement low. So this inducement low and also this inducement high, when we see that we have an inducement high and an inducement low, buyers and sellers are at temporary equilibrium. So when I see that equilibrium has happened, I need to now sense who is in control, what's happening next, especially as we are in our key time window. And the thing I want to notice here is that I have an inducement supply that has an internal mitigation, that has a refined IFC, so a zone I like, and in the key time window, and especially this huge channel on M1 at least, to target as a liquidity pool. So when I see these signs, and more importantly, as I compare it to my EU as well, which I'm having both side by side as always, and I'm seeing prices doing the same. It's tapping into the refined zone, pretty much the same. We had an inducement that led to a lower low and a refined IFC. Price is also grabbing this liquidity of this smart money trap. These equal highs and this zone that led to this push lower is getting induced. So when I see this inducement happening and tapping into my valid supply zone, then I'm seeing the same movement here on the same minute at exactly 13:10, 13:11, the same minute on both pairs. This is a signal for me that both have reached their zone. EU is inducing also. Here I'm starting to see rejections, so I enter based on this area and I call it as a public signal. So here from my Twitter, this is where I'm giving the signal number 73, total gain so far plus 57.5%, and the reasons for it, we can see the M15 read, which I've just covered for you guys, and then also the M1 read, and this is exactly where we are in our breakdown so far. So this was the entry I was taking. Look at the timestamp at the top, it's 6:16. Look at the price action right now, we're in that same timestamp, exactly real life trading, and you can also see the time of the post 1 minute later at 6:17. So we can see we are completely live ahead of time as always, and I'm giving the breakdown, and then as price starts to go in towards profit a few minutes later, then I'm talking about, okay, perfect, we're talking about readjusted break-even point, and then I continue lower and say, okay, we can start to reduce risk now because we're getting a 2-leg protocol formation. If you look closely, you can start to see that, which I've spoken about on the channel, where we have the high, then we have one push down, second lower high, new lower low, that becomes our 2-leg protocol zone. So I say reduce the risk to the 2-leg zone. And then as I continue on, I explain the reason I reduce risk is because of the efficiency of the pullback on M1. So as we continue on and we have both side by side, we are in a little bit profit, and I speak about let's do our reduce risk to this area over here. So I reduce my risk, I let everyone publicly know, and we are in a slight profit around a 1-to-1 up right now. And our full break even zone will be upon a break of this level. So this is what I'm waiting for. This is what I'm anticipating. And then as we play a few more candles, we see price shoots up and hit stop loss. So we had a 0.5% risk because I was risking 1% on this full amount. We obviously reduced our risk to this area. So a 5 pip stop loss became around 2 pips. So actually more like a 0.4% loss, but just for clean numbers, 0.5%. So that was the first loss of the session. I think a valid loss, and I continued to move on. And as I played a few more candles or watching it in real time, I started to realize something very interesting, which was price over here is going higher. We are getting a higher high to higher high, whereas on EU, we are getting this high in the markets that happened at 11 minutes past 3. And then at the current moment, at 25 minutes past 3, we are forming a lower high. So if this is going down and this is going up, I notice that divergence and I see it's just inducing the supply zone. And I notice that this could be an inducement. This is the real move because this has already induced this smart money zone. So when I connect the dots together and say here, we had this previous zone and we've already induced it and met our key place. Whereas over here, we didn't have an inducement, not an inducement, not an inducement, not an inducement, not an inducement, finally an inducement. So if we've induced here and we've already induced here, then it's simply a temporary depegging, a divergence, and this one is ready to go. So then I call it on my public signal and say, hey guys, this trade is now looking valid, even though we just took a loss. And I come here and say 0.5% loss taken on GU, but this is leading to the divergence on EU, which validates EU sells. And I'm talking about it right here at 629. I'm giving the entry. I'm showing the divergence. This is exactly where we are at 629 around this entry. So I give this signal as well. And then as we play it forward, we start to see perfect. We are starting to get a little bit of profit, price shooting down. And at this point, I've already mentioned break even. And I say here, happy to reduce risk to the red line. And then as we continue further, I say here is the break even point as price moves here at 36 minutes past the hour, ready to move stop loss to break even now. And if we check, that's at 6:36. So if we look here at 36 minutes past the hour and price is down here, I say let's break even. And then price shoots up after that. And then we hit break even. So no loss. But the crazy thing is we just induced by 0.5 pip, just that 0.5 pip wick to grab some liquidity. And then right after that, I hate to see it, I hate to say it, but price just went lower and lower and lower. And we can see on my phone on the public signal, I spoke about taking a partial at 1 to 3 risk to reward right here, which lines up around here. So we would have had the 1 to 3 partial right there. And we can see the divergence thing that we mentioned. It was a temporary depeg to grab liquidity and then continue lower on GU also. So both continued lower. And then this one slowly but surely wicked us for 0.5 pip, met TP1 for 1 to 3, and then continuing on towards our take profit 2, which is our 1 to 10 risk to reward. So when I see this 1 to 10 risk to reward trade where we get wicked out by 0.5 pip, but the time that it took, it's happening in the space of just about 1 hour exactly to get a 1 to 10 risk to reward trade. Unfortunately, we got wicked out here, but the point here is that this is a valid loss. I'll take it 10 times out of 10 because I want to have a situation where in a small window of time, I can get a 1 to 10 risk to reward with my partial at 1 to 3. That's 6.5% gain on my account. You can't do better than that. And look how fast it happened. This is regular trading. If you go through all my signals, it's the same thing. So even though I could widen my stop loss to avoid a situation like this, I don't, because this only happens to me a few times a year. But the rest of my trades, I have a tighter stop loss, therefore a better win rate and a better risk reward, and I can still have a good trade frequency. People always say if you trade tight stop losses, you will take loads of losses, and they imagine this happens every day. This happens just 1 or 2 times a year. You can have a tight stop loss, trade M1, and have a spectacular win rate because you break even quick. You might have a high break even rate, but your win rate will be high, your risk reward will be phenomenally high, and your trade frequency, well, you can do this a few times a week at a minimum. So I believe this is the best way of trading, and this is how I've documented plus 57% gain on my public signals. So if I average that out, that's about 3 to 5% per month. And if you have $1 million in funding and you know how to do 5% per month, as I've documented for over a year now, that's $50,000, and just think what that could do for your life. So in the end, the realities was I made no money today. I had a break-even trade on EU and a 0.5% loss on GU. So I lost 0.5%, when the realities is if I didn't have this wick, which is more often than not, I won't have a wick like this, I'll take a loss on GU, let's say, I'll be minus 1% down. And then this trade, which is plus 6.5%, will balance out my session, balance out my day, and maybe even make my whole week because I would be up 6% in a single trade. This is the power of intra-session high risk reward trading by truly understanding inducements and M1. And all of this only works if you understand what's a valid loss, what's a valid system, what's a valid win, which is why I always say a restricted trader is a profitable trader.